Let's just look at something today. Welcome back once again. Today we'll be looking at entry, and we'll be looking at what's called a risky entry and a confirmation entry. And the truth still remains that I will do my best to keep it as simple as much as I can. Just the way I do it in the market, the way I do this stuff, the way I trade it. That's all. So the goal of trying to teach what I do is doing my best to keep it as simplified as much as I can. So that being said, we'll be looking at, for example, let's say if you are waiting for a demand trade, for example, but price is coming from an unmitigated supply zone. Let me actually put up that on the chart now. Let me use this for example. Let me say there is a supply zone now. Please just pay attention to what I'm doing here now. Let's say there's a supply zone, and let me actually say unmitigated supply zone. Let me take this to, okay. Let's say this is an unmitigated supply zone, and we are waiting for a demand trade, but price is coming from an unmitigated supply zone. Now, what does this tell you? This tells you that supply is in control. And the most mistakes maybe most new traders do is that they are trying to buy, but you must wait for market structure to change. You must wait for a market structure to change. And when market structure changes, what we'll have then is what I call a confirmation entry. Now, let me put up what's a confirmation entry for you. So let's say this is a bearish trend, and in the bearish trend, we have lower low and lower high. So the market made a lower low, a lower high, and let me say the market made another lower low, and suddenly we notice this lower high here became violated by price action. Are you getting me? So let's say this lower high here got violated by price action, and we're waiting for price to actually retrace back into this very zone here. Let me say we're waiting for price action to actually retrace back into this very zone here. Just pay a very cool attention to what I'm doing, because it's going to help you very, very much. So let's say price retraces back into this very zone here. Now, for example, what we notice here now, what we have here is what we call a break in market structure, a change of character. Are you getting me? Now at this point, you can only take a confirmation entry because price is coming from an unmitigated supply zone. Now, for example, we have a change of character here, a break in market structure. Now, at this point, confirmation entry is permissive. Now, if we just take, let me put this here. Let me take this again. And at this point, let me say market steps into this and quickly goes this way. We can now take a buy now. Now, I equally want to add in something also. Don't just jump into this unmitigated supply zone and take a sell. It's wrong. It is very, very wrong. You must also do something. You must equally wait for a change in market structure, a break of change of character, a break in market structure to trade. Why? Remember, market is coming from a fresh zone here. Since there has been a change of character here, the bulls are now in control. You should equally wait as market steps into that unmitigated supply zone and mitigates it. You are not permitted to sell the moment market mitigates an unmitigated supply zone. You are not permitted to sell. You must wait for the market to change character, because the forces in charge that drove price to that level was being sustained by the bulls, and it did not just occur. There was a change of character. We'll still get into that, but I just try to teach you the concept of entry and the concept of entry, looking at risky entry and confirmation entry. Now, pay attention to this. Let me just bring in another let me add another diagram here now. Now, what am I trying to say before I start putting up this diagram? Always pay attention to know if price is coming from a mitigated or unmitigated supply zone. if price is coming from a mitigated zone, from a let me actually put it this way. If you have two zones, for example, and price is coming from an unmitigated zone, always be careful, because as far as that zone is unmitigated and there has not been any reasonable change of character, the forces pulling that price down is still in control. You can only say that they have lost control when at that particular time frame you are looking at, you spotted a change of character. And what do I call a change of character? Take, for example, the market is creating a let me say, if it's in a bullish trend, higher higher low. Let me make something. There is no, I need something perfect. Yes, let's do it this way. So the market was creating higher high, higher low, higher high, higher low, higher high, higher low. Now, on this higher low, if you notice the moments, any moment, and at the point at which market violates this higher low, now what we have now is what we call a change of character. The moment the price action violates the higher low, we already have a change of character. Now we'll just have to extend the zone that sponsored this break of the higher low, and we'll wait for market to retrace into that zone. That's just as simple as that. If market retraces into this zone that broke that low, we will be looking for a sell. Now, if it's in a bearish trend, let's say we have lower low, lower high, lower low, lower high, lower low, lower high. Now, at those points, this is our lower high, and we notice that at any point market came down and violated this lower high here. What we have here now is a change of character, or let me actually put this out here. Okay, what we have here now is a change of character, and what we have here likewise is a change of character. So we'll call it COCH, change of character, or BMS, breaking market structure. So let me quickly put that here. Change of character, or BMS, a break in market structure. So that being said, the moment price takes away this lower high, we wait for a retracement into the very level that sponsored the break, and we'll trade what price action does here. So move this way. So let me actually wipe everything on my screen now, as I equally add more light to what I've said so far. So now, on the concept of I'm not going deep into this change of character now, but I want us to pay very close attention to what I'm about to do now. Let me repeat this concept, because if you miss this very thing, you will have so many problems in your entries. This is where most people develop, like they find it difficult to enter a good trade. If we have, let me say, this is a supply zone, and on this supply zone, this level is unmitigated. Meaning the price has not tapped into this zone. Please, you are not permitted to take a buy trade until you notice what we call a change of character or a break in market structure. Now, around the zone, this is where we had our change of character or break in market structure. This lower high was violated by this move here. So what do we have to do? We extend the level or the zone, the block that sponsored this break in market structure of change of character. When we extend it and wait for price action to step into it, and we'll buy. Now, since we have noticed a change of character here now it's during this second retracement. This is what we call confirmation entry. Why is it a confirmation entry? Because the moment your candle body closes above this level, that's an indication that the buyer has just stepped in. Please, you wait for the candle to close. On a Japanese candlestick, we have the open, the high, the low, and the close. So the candlestick at the time frame you are looking at must definitely close above this lower high. Now, if the market retraces into this block and continues this move, that should tell you that the bulls just stepped in. Now, in a case of where there's the confirmation, now this break in market structure or change of character has told you now that the bulls are in charge. So at this point, this will have your confirmation entry. Now, what is the confirmation entry? Your confirmation entry is you waiting. Let me put this here. Okay. Confirmation entry is you taking a trade where the market has realized a change of character or break in market structure in line with the existing trend. So you look at the existing trend and you notice suddenly that the market changed character to the bulls, to the bulls or to the bear side. At that point, the market changed character. That's where you can take the trade. And you are taking a trade. Any trade you took after a reasonable change of character that is well spotted or aligned with price action, that's what we call a confirmation entry. Now, what's a risky entry? Let me take for example, if you've taken a trade that is in line with the confirmation entry, now you might equally now extend this level here. On this level here, we'll have what we call let me just mark this out now. At this high here, we'll have what we call the break of structure. So we'll have the BOS here. So this is a continuation trend. This was where the market broke structure because already the bull stepped in here. The bull stepped in here at this very point. This is where the bull stepped in. So they took away this lower high. And now we'll notice that this was our recent higher high. And this is our higher low. And the market closed above this high. So this is a break of structure. Is in a continuation. So what do we have to do? We have to look at the market and wait for the market to retrace. The market should retrace into this zone. Now, while you are waiting for the market to retrace into this zone, you don't need to wait maybe for a change of character. You just impute an order here. You just input a buy limit, a pending order here, that the moment the market steps into this zone that broke this structure, this is the very zone that sponsored the break. Let me take this out now. This zone here sponsored the break of this high. So you just place a pending order here. Let me say you pick something like this. And you just place a pending order here. And let me say this is your stop loss. And you are targeting this high. So as the market steps back into this zone that broke this high, you should just pick your order and move you up. As simple as that. Now, the same thing is applicable if you inverse this chart. It doesn't matter whether you are looking at it from both, whether the bullish side or the bearish side, you should be able to spot the same thing. We have our higher high, higher low. I will notice that the higher low was broken. So already the moment it was broken, we have a change of character. We'll have to wait for the market or price action to step into the level that sponsored the change of character. And at this point, it steps into this level and continues the move downward. This is where we have our confirmation entry. Now, for you to be on the safer side, take note of this. For a change of character or a break in market structure should be considered valid, valid. Let's put it this way. In a bullish trend, for you to know that there's a change of character in a bullish trend, you must expect at least 2 lower lows. 2 lower lows must occur. Now, in a bearish trend, for you to know that there is a change of character in a bearish trend, you must expect two higher high. Why am I saying this? Take notes that why I'm saying this because so you will not be subject to a raid of a low or a raid of a high. Now, if you put this practice and everything I've said so far to heart, it will always deliver you from being a victim or contributing to liquidity in the market. That means you are fueling other people's trade. You'll be used as the gasoline to fuel other people's trade. So let's continue. Now, the moment we step into this unmitigated zone, it will be very wrong for you to buy. Why? The dominant trend here now is the sellers. It's a bearish trend. Before you buy, since the market has stepped into an unmitigated zone, you must wait for a change of character to occur likewise before you buy. If you keep up with this practice, you will understand something that you have actually refined your entry. You have refined your approach to price action. It will always help you. Now, the only point at which you are permitted to make a risky entry without watching out for confirmation is, watch what I'm trying to show you now. After this break in market structure here, let me mark this out. After this change of character here, and you notice that the price action went back, step into this zone that sponsored this break of this level here. So this zone now sponsored the break of this level. Price action stepped back and continued moving further. Now, at this point, he stepped back. Remember, we have our first lower low here. Now, the point he stepped back and created our second lower low. You can just mark the zone that created the second lower low. Take note of everything I'm saying. You mark the zone that created the second lower low and you just place a pending order on it and expect it to pull through. As simple as that. So this first trade here now is we must wait for a confirmation entry. But for the second trade, you can just pull it along. And that's what we call the risky entry. Now, remember what I've said so far. For you to be on the safer side, whether on a change of character or a break in market structure, in the bullish trend, for you to know that there's actually a break in market structure, you must expect to see a higher, for a bullish trend, you must expect to see two lower lows. And for a bearish trend, you must expect to see two higher high. Now, and I keep saying in a bullish trend, what is dominant is just the market keeps making higher high, higher low, higher high, higher low, higher high, higher low, and so on. So this is the higher high, this is the higher low, this is the higher high, this is the higher low, this is the higher high, this is the higher low. Now, on a bearish trend, the market keeps making lower low, lower high, lower low, lower high, lower low, lower high. So that being said, let's just quickly look at the chart now. Looking at this chart now, when you are looking at the chart now, the first thing you have to do, if you want to actually spot the trend excellently, I tell people, if you want to spot the trend excellently, just quickly move your chart to a line chart. It helps most times. If you move your chart to a line chart, you'll be able to easily spot the higher highs and the higher lows. Why? The line chart only considers the close of the candle. It considers the close of the candle. So this is another cheat, but I'm still going to step into, as we move further, into change of character and break of structure. So let's don't actually exhaust ourselves on this. So for now, what I've done my best to do justice to is the concept of entry and a risky entry and confirmation entry, where you have to wait for a change of character and where you have to enter without waiting for a change of character. When you have to wait for a change of character, it's called a confirmation entry. But where had there been a change of character and a confirmation entry already in place, you can take up a risky entry without waiting for a change of character, because there has been a change of character and a confirmation beforehand. So don't just blindly take a risky trade or risky entry without making sure that there have been a change of character in place of there have been a change of character followed by a confirmation entry. That means, remember the laws here. For with that, what we say that for a change of character or break in market structure to be valid, we must have two lower lows. And it's only the point at which we have these two lower lows that it is very wise for you to be considering the actual change in trade valid. Change in trade valid. At that point, you are not subject to raid. Just be putting everything together, I'm saying, as a piece, as a piece, as a piece. By the time we run through every necessary topic, it's going to become a whole. The picture will get clearer and clearer and clearer to you. Thank you so far.